Hey, welcome back to the channel. Today I want to go over the PM session and silver bullet session for Friday, June 23rd. We're going to go candle by candle. This dark gray box is the 12 to 130 range that ICT told us that they will usually try to sweep either the high or the low and grab liquidity, and then we'll be looking for a reversal down to the other side as the first target. So if it comes down here, sweeps this first, and then we'd be looking for a reversal pattern to go long. If it sweeps up here like it looks like it's already going to, then we'll be looking for a reversal pattern to go short. Okay, so let's go candle by candle and see what happens here. Let's go. All right, so I can see this little itty bitty green arrow on this indicator. Once it closes above this line with a candle body closing above it, it'll give me that green arrow. This one, it started here and came down, closed here, so it didn't close above it. It started above the line. So that's why there's no arrow there. There is an arrow here. So now it's gone above. Liquidity has been taken. Okay. Now, for us to go short, I'd want to see this low, swing low being taken as a market structure shift, because that's the swing low that created the swing high, took out this swing high. So that's what I would need to see. There you go. All right, so there is market structure shift right there, like I was saying. Now we need to see what we have. We have a little fair value gap right here. Let's mark that on the chart here. There's a fair value gap there. Yeah, let's see what happens. See if it comes back up. Okay, so there's another fair value gap right here. So there's two fair value gaps right there. So if it comes back up into this, I will take a trade. All right, so let's sell two there. I'd be getting in right there. Put my trade there. I would aim for, like I said, liquidity swept on the top. So our first target would be this one down here, the line down here, and that is a 11.25 handle move right there. So okay, we were in. Our high goes above the first candle of our fair value gap, but we'll go over the high since it's only 3 handles right there. And let's see what happens here. So I'm going to mark out where I take my partial to. I take my partial right here. So let's mark this on here. Sell side partial's taken here. So just so it's in my line here. Actually, let's move this so it's not blocking anything. So if a candle closes above here, because this I can't take a partial at this line, I'll just buy one when it comes back below there. So just to let you know, you had a second opportunity to short right there at that candle. Oh, there's another selling opportunity right there. Notice how the candle bodies is respecting that fair value gap. Still, candle bodies respecting it. It's a good sign. Another opportunity to buy. Well, that candle closed inside it. Still not quick into it, but that's another entry, possible entry in there. And then you're out right there. Okay, let's see. Okay, so leave behind this fair value gap right here. Let's see what we get here. Guess we have another. Let's see. All right, so this is our first target. Let's see what there's other targets here. That's a draw on liquidity right there. And there's another draw down there. So that's where we're at. I see fair value gap right there. I see another fair value gap right there. Let's mark that up too. There's two again. Let's mark that up here. And why I like that fair value gap? Well, because this is a swing high right here. This is a swing low that created a swing high. It's just a short-term low because we're already, market structure shift is right here. We're already bearish. So it's a short-term low being taken. So let me mark that out as a short-term low. Short-term low cleared. Okay, so if it comes back in here, I'd take another one because we still have a lot of range here to our target. So if it comes back up, I'd take another trade. And right there's my where I would have got in. I would have shorted right there. Now when I sell two more here, I'm selling down here, not up here where I should be because of the way Tradingview does it. So I will short two more right there. And then I'll be taking, since I'm in two, I'd be taking two off if we go beyond this part and leave two runners. So see what happens here. I need a candle to close below that line. It's close. I need a candle close. Just move this out so we can see this more. I need a candle to close beyond that line for me to take a partial. Okay, at the line. So let's buy two right there. That's at the line. That's perfect. That would have been, if we had our limit order here, then it would have taken us out right there. So having it close right there is actually perfect for us, actually. So that works out well. Now I have two more contracts for the remaining. Now my stop is now break even. So I'm down here. It's definitely a risk-free trade. This would have been broke even. So I'll just move that down so you can see that we're in a risk-even trade. Now if it comes down into this range down here, I'm moving my stop way down here because I'm not going to lose all that money. Especially if you're in one of those trailing drawdown prop firms, you can't allow yourself to come back all the way up. It's it takes your trailing drawdown too much risk there. You got to manage your risk differently until you're a funded trader and have a buffer. So we're at risk break even right now. Three dojis in a row. I do see a fair value gap right here, but if you took your fib from the high to our target, that's our target, is this line here. So our target is right here. We would have to come up here to be able to take a short. So this is not in premium, it's still in discount, so we can't take that trade even if it goes into that. See, so I want to make sure you see what I'm seeing. This right here, this fair value gap, it's a fair value gap and it's fine. You shouldn't take its trade here because yes, it's 5 handles. I'm sure it's 5 handles. Let's put it right here. I'm sure it's 5 handles. There's more than 5 handles. Yep, you're 6 handles away. And your stop would go right there. So you're not risking much? No. But you're in a discount. We don't sell in a discount. Okay? It's just our rules. We don't do it. Yes, it may work out, but we don't. We stick to our rules. So this would be, we're just wanting this to hold price because it'd be respected. We're going short. So we want to see this hold price. So the candle body is respecting the top. We don't want to see a candle close above it. Still a candle respect it. Let me zoom in here. See if you can see this better. The candle body is respecting it. The wick is respecting it, so that's good. Okay, that's good. Even better. Okay, when I see this and it's closing right here, that is only 1.5 points from my target. I move my stop to right here. Let me just draw my. This right here would be where my stop loss is. That's where my. This is where my stop would be right here. Why? Because I want to have this much profit if it does come back up, but I want to give it plenty of room to have a pullback and then hit my target. But if you're in, like I said, if you're in one of those prop firms that have a trailing drawdown, you can't let it come all the way down to here and come all the way back up and take you out of break even, because all of this would be lost in your trailing drawdown without any profit. So you got to manage your trade better than that. And so right now I'm moving my stop to right there. So we'll see. When it comes back up there, I'm taking them both out. So. Okay, at this point, when we're within like one tick, this is down to here. All right, right there we buy the last two contracts and see how it goes from there. Okay, let's do this. See if it hits our other two targets. It does. Right there's our other two draws in liquidity. So look at this. Had you left a runner on, you could have gotten. There's a 21 handle move versus the 11. So you could have doubled it. Right there. So I always like to try to leave a runner on for that when I'm live trading, but in this instance I'm showing you how to hit your target. Your $1,575 in profit. We came up, took liquidity out here, we broke structure, we saw two fair value gaps, we entered on a fair value gap, but it also gave us a second, third, fourth, fifth, sixth, seventh entry chances to get in here while I was respecting that fair value gap. Didn't never cross the consequent encroachment with a candle close. And then when it came back down, took out another swing low. We were still far enough away from our first target so we could get in because we're still in premium to go short. So we took another entry. Then when it hit our first major swing low, we took partials. And then it came back up. We didn't take this entry because if we drew our fib from our tie to our target, this was in discount and we don't short in a discount. So we just want to see that being respected. We draw it on our chart so it is. We see it, make sure it's being respected. It was respected. So then we take it down. This is my trailing stop loss. It was here when we came down here, and when we got so close down here, we moved it down here just to make sure that we capitalize on all of our profits, especially if we're in a prop firm. And then it hit our target and we got out. Okay, so there are your two PM session trades on June 23rd.